Investment strategies are crucial in determining the performance of an investor's portfolio in the dynamic financial markets. Investors must remain educated and modify their strategy appropriately in 2023 since the market is dynamic and full of chances and difficulties. This thorough book explains important investing techniques that are specific to 2023's special traits. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Diversification and asset allocation. A key idea that still directs successful investing methods is diversification. To lower risk exposure, it entails distributing assets across a variety of asset types, including stocks, bonds, real estate, and commodities. This approach is particularly pertinent in 2023 because of the uncertainty that follows the worldwide epidemic. Portfolios are shielded from significant losses in the event of a downturn in a certain industry because to diversification. One of the most important components of diversification is asset allocation, which is figuring out how to distribute assets in a portfolio as well as possible. The distribution need to be determined by each person's time horizon, investing objectives, and risk tolerance. Bonds give stability while equities have the potential for larger gains, thus, a balanced allocation is crucial. Technology and innovation. Technological innovation is changing sectors and opening up new investment possibilities at a fast rate. Artificial intelligence, AI, renewable energy, biotechnology, and blockchain technology are among the industries that are predicted to develop significantly in 2023. AI is being used in a wide range of sectors, including banking and healthcare, to improve operations and generate new income. Another potential sector is renewable energy, which is being pushed by the worldwide trend toward sustainability. Financial rewards and environmental objectives are compatible with investments in solar, wind, and other clean energy sources. Medical innovation is still led by biotechnology, and developments in genomics and customized medicine provide financial opportunities. Beyond only cryptocurrencies, blockchain technology has applications in digital identity verification, supply chain management, and other fields. Environmental, social, and governance (ESG) investing. From a fad to a cornerstone of investment strategy, ESG investing has developed. Businesses that place a high priority on social responsibility, environmental sustainability, and good governance are not only making a beneficial impact on society but also showing signs of great long-term potential. 2023 will see an increase in the number of investors that take ESG aspects into account when making decisions. Analyzing a company's social policies, governance framework, and environmental effect as part of ESG integration. Businesses with high ESG ratings should do better financially because they handle risk better, are more innovative, and are generally more resilient. By matching investments to cultural norms and global trends, ESG investing may improve long-term profits. Global market exposure. The significance of international diversification is underscored by the interdependence of the world's economy. News from one area may have an influence on markets around the globe, emphasizing the need of expanding exposure outside home markets. Consideration should be given to developing markets and industries in nations like China, India, and Brazil that have significant development potential in 2023. Mutual funds and exchange-traded funds, ETFs, are effective means of getting exposure to overseas markets. To comprehend the geopolitical dangers, economic circumstances, and regulatory elements that might affect the results of investments, however, comprehensive study is necessary. Cryptocurrencies and digital assets. Digital assets and cryptocurrencies have moved from being niche investments to being widely accepted. Investor interest has been piqued by the rise in popularity of Bitcoin and the advent of other cryptocurrencies. However, due to the high level of volatility and unpredictability around regulations, this area has to be carefully considered. Those who are interested in investing in cryptocurrencies should evaluate their risk tolerance, learn about the technology behind them, and do extensive study. Some perceive cryptocurrencies as speculative investments, while others think they may be a good hedge against established financial institutions. Income-generating investments. Income-producing assets stabilize portfolios through possible interest rate swings. Regular cash flow assets include bonds, real estate investment trusts, rights, and dividend stocks. Bonds and rights provide rental yields and interest income, respectively, while dividend stocks give investors a portion of a company's profits. These investments serve as a hedge against fluctuations in the market, particularly in times of economic recession. It is crucial to give careful thought to the sustainability and quality of dividend or interest payments. Risk management and due diligence. Managing risk is essential to successful investing. Performing comprehensive due diligence prior to making investing choices reduces the possibility of losses. This entails examining the financial records of an organization, comprehending its business strategy, gauging its competitive status, and rating the caliber of management. Being diversified helps avoid being overexposed to any one asset, which makes it a risk management tactic in and of itself. It is equally crucial to keep a close eye on investments and to modify the portfolio in response to shifting market circumstances. Long-term perspective. Having a long-term outlook is still essential for successful investment. While short-term market swings are unavoidable, savvy investors pay attention to broader patterns and their financial objectives. Timing the market incorrectly might result in lost opportunities and higher transaction expenses. Creating a disciplined investing strategy that is in accordance with long-term financial goals aids investors in maintaining composure in volatile markets. Continual evaluation of the strategy and necessary modifications lead to a more successful investing experience. Robo-advisors and automation. Automated investing platforms and robo-advisors provide affordable portfolio management options. These platforms use algorithms to build and adjust diverse portfolios according to the risk tolerance and financial objectives of investors. Even those with no prior financial knowledge may get professional portfolio management with the help of robo-advisors. Investment decision-making is streamlined by automation, which also guarantees long-term adherence to the selected course of action. To guarantee alignment with changing objectives, investors should still be aware of the underlying strategy and often assess their portfolios. Conclusion. The year 2023 has a wealth of possibilities and challenges for those interested in investing. One thing becomes clear as we wrap up our investigation of important investing methods for this exciting time. Knowledge and flexibility are the two cornerstones of success. While volatility and change are the norm in our period, the fundamentals of asset allocation and diversification never alter. They provide protection against the uncertainties that might arise from market volatility. There has never been a better time to embrace innovation and technology, and industries like blockchain, AI, and renewable energy may lead to future expansion. ESG investing highlights how the financial industry is becoming more socially conscious and how investments have the ability to influence not only portfolios but also the whole globe. Exposure to the global market becomes a passport to a variety of development chances as the world gets increasingly linked. After being on the periphery, cryptocurrencies have solidly entered the mainstream. Even if they are alluring, they serve as a reminder of the value of thoughtful investigation, in-depth study, and moderation in taking risks. Income-producing investments give both financial security and peace of mind by providing a constant beat amongst the clamor of market fluctuations. An unwavering long-term outlook and risk management serve as bulwarks against hasty decisions. The emergence of robo-advisors highlights the significance of intelligent automation and heralds the democratization of professional financial advice. Looking forward to 2023 and beyond, the combination of these approaches suggests that investing will be more than just making money. It's a way to take control of one's own fate and match individual success with greater social advancement. But it's important to remember that investing methods are not set in stone. Every person has a different route that is determined by their aspirations, risk tolerance, and ambitions. This is it for today's video. What do you think of our video? Comment below with your thoughts and let us know. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.